Welcome to the Deep Dive. Great to have you with us. This is where we take the material you send over, maybe articles, research notes, and we dive deep into it. The whole idea is to unpack it, pull out the key insights, and give you a clear sense of what's there. Maybe find something unexpected too. It's kind of your shortcut to getting informed on what matters to you. So today, we're jumping into a company called Innovative Solutions and Support, Inc. You sent over an analysis document covering their business, and we're going to explore what this specific doc tells us. The ticker is ISSC, right?
That's right, ISSC. And our mission here, it's really specific. Understand what this particular analysis says about the company. We're sticking strictly to the info in this document, pulling out the details, the insights, just to see the picture paint.
Okay, makes sense. Let's unpack this then.
Yeah.
What's the first thing this analysis tells us about Innovative Solutions and Support, Inc.?
Okay, so right off the bat, the document identifies ISSC as a specialist in advanced aircraft systems. We're talking air data systems, autothrottles, flight management systems too, navigation.
And it sounds like these aren't just individual components, are they? The analysis seems to stress they're integrated systems designed to boost safety, efficiency, make the plane operate better. So the complex digital stuff in the cockpit, critical info control systems, sounds very focused on the core flight function.
Exactly. That's the focus it defines. Looking at the history section here, it notes the founder, Roman Ptakowski, started it back in 1988. And what really jumps out is that he's still the president and CEO. That's quite a long time at the helm, especially in aerospace.
Right, yeah. Steeped in this specific field. The analysis mentions they started with their own tech, right? For air data and flight management. Then through the 90s, the 2000s, they expanded the product line. And a key point it highlights is getting those certifications for different aircraft types.
Oh, absolutely critical. Those certifications are a huge deal in aerospace. It's a tough process to get anything approved for flight. And this document points out they got them for new planes, the OEM market, but also, importantly, for retrofits, upgrading planes already flying.
Right. And they went public 2006 on NASDAQ. The analysis says they kept investing in R&D, keeping up with aerospace needs, adding things like advanced autothrottles, better displays.
Yeah, and it suggests their recent strategy is really about holding their ground, meeting modern needs like fuel efficiency, better pilot awareness, meeting new air traffic standards. A point that comes up a few times is their specific autothrottle solutions. Often quite unique, it seems, particularly for that Boeing 737 retrofit program. That gets mentioned specifically.
That 737 autothrottle.
Yeah.
It sounds like a really core piece of their business, according to this document. So, okay, let's dig into the specific products a bit more. What systems does the analysis detail?
Well, it lists several main areas. First, ISU's integrated standby units. These are like compact digital backup displays. They pull together critical info, attitude, altitude, airspeed, all in one spot. Essential backup systems.
Okay. Then air data systems. These measure things like air pressure, altitude, really fundamental stuff for controlling the plane accurately. So that includes the computers processing the data and the probes outside gathering it.
Exactly. Then you've got flight management systems, the FMS. These are the more complex computers for navigation, flight planning. Pilots use them to manage routes, figure out the best fuel efficiency, basically run the whole mission plan. And the document mentions again those auto throttle systems. They manage engine power automatically, right? To keep a set speed or thrust, cuts down pilot workload, especially during busy times like takeoff or landing. And again, their specific solutions, like for that 737 retrofit, are noted as key.
Got it. They also do integrated displays, general cockpit solutions, basically the fancy digital screens and panels that show all this data clearly to the pilots, and navigation systems for positioning.
Right. And this analysis breaks down their market into two main buckets. Retrofit and modernization, that's upgrading older planes, described as a big chunk of their revenue. And then OEM solutions, providing systems for brand new aircraft as they're built. Their customer base, it covers commercial airlines, military, government, corporate jets too.
So who exactly is buying these specialized systems? The customer list in the analysis seems pretty focused.
It is. It's global, but within aviation. So commercial airlines, big international ones, smaller regional ones buying for new planes and retrofits. Aircraft manufacturers, the OEMs, obviously direct customers integrating systems during production. Military and government agencies use their stuff on various platforms. Corporate and business jet operators are in there too. And importantly, MROs, maintenance, repair, and overhaul facilities. They often partner with ISSC to actually install the retrofits.
And the analysis notes these customer relationships are often long-term, which makes sense, doesn't it? Given how long certification takes and how vital these systems are, Once you're certified on a plane and integrated into a fleet or production line, that seems like a sticky relationship.
Yeah, that stickiness is definitely highlighted. Okay, let's shift gears. What about the financials? What does this analysis tell us about their money situation? It paints them as a smaller, specialized player.
Right. Clearly small cap. The performance described is stable overall. But the analysis does note it gets pushed around by the big aerospace cycles, defense spending, and crucially, the timing of winning those big retrofit deals.
Yeah, the document puts their revenue in the tens of millions per year. It gives a specific example, Q1 fiscal 25, estimating revenue around $6.5 to $7.5 million. It notes that while there's growth sometimes, it's often moderate. And it can be lumpy, like you said, depending on when big contracts land.
And profitability. The analysis says they've generally made money, though net income can bounce around. That Q1 25 example puts net income somewhere between $500,000 and $1.5 million.
But here's a key thing the document points out. Healthy gross margins, often 30-40%, maybe even higher.
Yeah.
That's not typical for just any manufacturing. It really speaks to the specialized, high-tech nature of what they make. Certified aerospace systems command that value. It's definitely not a commodity business.
Mm-hmm. And the balance sheet. Described as generally strong, healthy, good cash, not much debt, suggests they're pretty careful financially, which you'd need to be in aerospace with those long lead times and contracts.
Right. And the analysis notes they generate positive cash from operations. That helps fund their R&D and infrastructure without needing tons of outside money.
It also mentions their order backlog, which is pretty standard for aerospace suppliers, right? Mm-hmm. Gives some visibility into future revenue from contracts they've won but haven't finished yet.
Exactly. It's a forward-looking indicator.
Okay, so we've got specialized products, focused customers, stable-ish finances, good margins. But who are they competing against? The analysis lists some really big names.
Oh, absolutely. ISSC is in a defined niche, but yeah, it's competitive. They're up against the major aerospace and defense primes, the giants with huge avionics divisions, Honeywell, Collins Aerospace, which is part of Raytheon Safran, Thales, global behemoths.
Wow, yeah. Household names in the industry. So how does a smaller company like ISSC even compete with those guys? What does the analysis say helps them stand out?
It highlights a few things. Their intense niche focus, for one, developing proprietary tech for specific needs, getting those crucial certifications on key platforms. And again, that 737 autothrottle gets cited as a prime example where they have a strong foothold.
Yeah.
And maybe their ability to offer solutions that are more cost-effective or quicker to implement for certain retrofits than the big guys might bother with. They seem to find specific spots where they offer unique value that maybe the larger, more complex companies don't prioritize quite the same way.
Okay, interesting. Let's switch to the stock itself. The analysis gives some specifics as of June 9, 2025. Stock price around 8.46 cents. Market cap about $140 million. That definitely puts it in small cap territory.
For sure. And the 52-week range provided $7.28 low to $9.99 high suggests, well, a fairly contained trading pattern. Not like those high-flying growth stocks. The analysis explicitly says it's less volatile than, say, speculative tech, although being small cap, its percentage moves can still be bigger than giant companies. It mentions its beta is typically near 1, so it generally moves with the market, maybe a bit more amplified.
Right, tracks the market, but maybe a bit more sensitive because of its size. The analysis says recent performance showed some moderate gains off the lows, but it hasn't really broken out past the year's high. Price moves, according to this document, seem driven mainly by earnings, new contracts, and just general aerospace trends.
And regarding what analysts think, the analysis points out there's limited coverage, which isn't unusual for a company this size in this niche. When there is coverage, the consensus documented tends to be hold or maybe buy.
And any price targets mentioned in the doc, they typically suggest just modest upside from current levels. This whole assessment seems to paint a picture of a stable, profitable company, but maybe without obvious triggers for, explosive growth right now. The sentiment described as neutral to positive, solid business, but not necessarily a rocket ship.
Yeah, and that assessment links directly to how the analysis views management and the overall price outlook. The document sees the management team, led by the founder Roman Ptakowski, as providing stable leadership and a focused strategy.
His long time there provides continuity, deep knowledge, which the analysis notes is really valuable in aerospace. With the long development cycles, complex rules, need for long-term relationships. The doc suggests their strength is in keeping that niche expertise and running a consistently profitable operation.
It highlights their success in developing and certifying these complex products. That points to strong engineering and regulatory skills, and that strong financial health, low debt, presented as a sign of prudent financial management.
But the document also lays out challenges for management, right?
Yeah.
Dealing with the ups and downs of the aerospace cycle, competing against those giants with way more resources, keeping up with tech changes, and finding ways to grow significantly beyond their established niche. That can be tough for a specialized small cap.
Absolutely. So pulling it all together, the analysis characterizes the company's price prospect by, well, stability and modest growth potential. It's presented as pretty typical for a specialized, profitable small cap in a mature, essential industry.
So what are the key positive drivers for the future mentioned in this analysis? What could push it forward?
The document points to things like stable long-term demand for aerospace systems, especially upgrades. That need for retrofits on older planes like that 737 auto-throttle program, again, that's seen as steady demand. Their specialized niche expertise is highlighted as a competitive edge, helps keep those healthy margins we talked about. Consistent profits, sound balance sheet, that's a solid foundation. And there's always the potential, of course, to win new OEM deals or other big retrofit programs. The analysis suggests those could be catalysts for growth.
Okay. And on the flip side, the potential headwinds or risks outlined in the document.
Industry cyclicality is a big one. Aerospace is sensitive to the global economy, geopolitical stuff. Intense competition from the big players, that's constant. The analysis also mentions potential concentration risk, maybe relying too heavily on just a few big customers or programs. Tech obsolescence means they always have to invest in R&D. And just being a small cap, the stock can be less liquid, maybe overlooked by investors.
And crucially, the analysis explicitly states that huge explosive growth. That's generally not the expectation here based on this profile. Unless they have some massive tech breakthrough or expand into totally new markets, it doesn't fit that high-growth investor mold.
Right. So the overall price prospect, according to this detailed analysis we've looked at, is seen as neutral to positive. It's presented as financially stable, consistently profitable, operating well in its specialized aerospace niche. Future performance seems tied to steady execution, benefiting from trends like fleet modernization and managing those competitive pressures.
And like you said, the analysis seems to position it as potentially more appealing to, say, value investors looking for stability and profit in aerospace, rather than someone purely chasing explosive short-term growth.
That really seems to be the clear picture this specific analysis document paints of Innovative Solutions and Support, Inc.
Fantastic. Okay, so after this deep dive, just focusing on this analysis document you shared, what's the kind of distilled takeaway? What's the core picture of ISSC here?
Well, based purely on this source, ISSC comes across as a specialized, profitable small-cap company, right in the critical aerospace avionics sector. Its main thing is providing these advanced certified systems, autothrottles, ISUs, flight management systems, air data computers, and probes.
And its position in the market, as highlighted here, is really that defined niche focus, with a big piece being the retrofit business that 737 Autothrottle is mentioned again as key, but also supplying new aircraft manufacturers, the OEMs.
Financially, the analysis describes stability, consistent profit, revenue in the tens of millions, net income usually single-digit millions, those healthy gross margins, 30-40% plus, strong balance sheet, low debt. But yeah, the analysis is very clear. This isn't showing signs of explosive growth.
And they're up against huge competitors, Honeywell, Collins, those guys. But they differentiate through their specific tech, niche focus, getting those key certifications, and offering targeted retrofit solutions.
Exactly. So the outlook presented in this analysis is one of stability, potential for modest growth, driven by things like older fleets needing upgrades. But that's balanced against the industry cycles and that intense competition. The document suggests it might appeal more to investors looking for stability and value in this sector rather than those chasing, hypergrowth.
Yeah, this really highlights the value of digging into a specific source, doesn't it? Understanding exactly what that document tells you about a company's niche, its financials as laid out there, its market position. It helps you get a more grounded view than just relying on general market buzz.
Absolutely. And looking at ISSC through this specific lens, it shows how companies can definitely succeed, even thrive, in these really specialized niches, even against giants. It kind of leaves you with a question to think about, based on this example from the source. What makes a stable, consistently profitable business appealing in your own view, compared to that constant search for explosive growth, especially in demanding complex industries like aerospace? Something to ponder.